Hello everyone, welcome to the 12th episode of the Women Startup Leader Series. In this series, key female ecosystem players from Bangladesh and beyond will discuss facets of angel investing and all things startup. In this episode, we have Visa Kannan as speaker and Nujur Rahman, CEO of Bangladesh Angels, as moderator.
Excellent. Welcome, everyone. My name is Nujur. I'll introduce our speaker. So Visa Kannan is a partner at Saison Capital, a single LP fund backed by Credit Saison Asia Pacific that invests in pre-seed to Series B companies globally, but with a focus on Southeast Asia and India. Investing across all verticals, including but not limited to SaaS, marketplaces, and fintech, Saison Capital has a deep fondness for embedded finance, non-fintech companies and industry leaders that are looking to build fintech arms within their ecosystems. Visa comes with a wealth of experience in the startup space, having previously held leadership roles at two unicorns, Grofers and Lazada. She also has a background in consulting and law. Visa, welcome to BAN. Thank you so much for joining us.
Thank you so much for having me. This is great to kind of get to know the Bangladesh ecosystem.
Absolutely, and it's a pleasure for us to host you as well, and thanks for doing this on a Friday. We always like to kind of start with people's backgrounds just to get to know them a little bit better. Where did you grow up, and when you were younger, what did you aspire to be?
So I grew up in India. I had a pretty, diverse upbringing in India, so to speak. So we moved quite a lot. My father had a transferable job. So I grew up in the West for about 7 to 9 years, then in Bengal actually for another 7 to 9 years. So I'm ektu Bangla Jani. I can get by. When I visited Dhaka, I could get by with my broken Bengali, so I was quite proud of myself. So broadly kind of grew up across India. I also, when I was, as far as I remember, I wanted to be a lawyer, and that's what I studied in undergrad and became a lawyer for about 3 years before I jumped onto the other side, onto the business side of things.
And so you went to business school at INSEAD, and then you kind of transitioned into these operating roles in tech. And so just curious, what was the motivation behind that, that transition from law to business and then specifically tech and big tech?
I think the transition from law to business was just to get like a wider perspective on things, to be honest. It wasn't really motivated by kind of saying, okay, I don't like being a lawyer or anything of the sort. I had a fantastic time being a lawyer. It was most amazing 3 years at Amarchand Mangaldas, which is a pretty big firm in India. It was a really good experience, but of course, like as a lawyer, you're looking at transactions and deals from a very particular perspective. You have a very particular sense of, what your role is in the world, so to speak. So it just, to my mind, thought it would be great to kind of just get a wider perspective. And INSEAD was great for that, because INSEAD also has, I think, two big things going for it for folks like myself. One is that it's for slightly older people who kind of go after getting like 3-4 years of work ex. So it's very nice to kind of meet people who are at that juncture in life, as opposed to just right out of college. The second thing, of course, it has going for it is that it's truly very international. So there are about 70-80 nationalities that kind of, have, like, you have 70-80 nationalities, folks kind of being part of your class, which is really helpful to just get that breadth of perspective. So it's not just from a field perspective, but also from like, what really is out in the world for you to explore. So I think those two things were really, really great at INSEAD. And it really helped me kind of achieve what I wanted to, which was just to kind of broaden how I look at this world.
Perfect. And then you went into these operating roles, first at Lazada, and in Singapore, I believe, and then to Grofers in India. I think we all know Lazada and the story of Lazada. Grofers, I think, is a relatively newer story, and I'm always curious. How did in the context of South Asia, what exactly are the enabling factors that allows 10-minute grocery deliveries? That's always very curious. I just wanted to learn more.
Yeah. So actually, I think the 10-minute grocery story in South Asia cannot kind of be said without kind of the grocery story that came before it. So broadly, if you look at the market landscape, right, in South Asia, and I'm sure this is true in Bangladesh as well, 90-95% of the market is basically your neighborhood mom and pop store, right? So in India, that's called the Kirana Wala. I'm not sure what it's called in Bangladesh. What would you call the neighborhood store?
We call them mudid dokans.
Okay, yeah. So you call, like a dukan or like a, or like a kirana shop. They basically dominate this market, right? So it's pretty old in terms of like your supply chain. It's pretty old in terms of how long they have existed for in the same format, right? So if you think about really who tried to kind of win grocery first, it was essentially folks who said that I will just aggregate demand from neighborhood stores, which is what Grofers kind of in its first version was. Aggregating demand from neighborhood stores suffers from two broad problems. One is very slim margins. The second one is the supply chain at the store level is actually not very great. So, of course, all of us have had this experience, right? You go to a neighborhood shop, you ask for Lakme. He's like, I don't have Lakme, I have Ponds. Will you take it? You'll be like, sure, I'll take it, right? But your ability to do that online and translating this behavior to online is pretty poor, right? So these are the broad two problems that a marketplace kind of faces. So then folks moved on to retail businesses in the grocery space. So that kind of takes the form of Red Mart in Singapore, I guess, and Big Basket and Grofers are the big two players in India, right? So then you're like, okay, you know what? I'm going to aggregate demand at a city level. I'm going to have a city warehouse and I'm going to deliver it to you the next day. Now, the problem with that essentially is that folks are habituated to going to this Kirana store on an immediate need basis, right? So people do, so I think there was one report that suggested that people visit the neighborhood store 24 times a month. From anywhere for FNV to milk to to dairy needs to FMCG needs to staples to all of that, right? So the number of times you actually tap into this Kirana network is pretty high, right? So the reason why the next day delivery kind of didn't take off, I would say, in a way that it should have, is broadly because I don't think it necessarily translates this 24 times behavior online, right? It's a very different type of behavior. And in grocery, the biggest thing is habit. The reason these Kirana stores exist in the form that they do, in the shape that they do 100 years on, is because it's become a habit, right? It's become a very habitual part of our lives. So this 10-minute delivery basically takes that behavior and brings it online, which is why I think it's just probably the only model which will successfully break the Kirana dominance, so to speak, in India and in South Asia broadly. So I think what it does is it helps you kind of order at the frequency that you want from your neighborhood store, except it's not that Kirana store, it's a dark store in the neighborhood. From a margins perspective, it's much better because you're actually holding inventory. So you're able to sell fruits and vegetables, you're able to sell higher margin categories, you're able to kind of forecast demand hyper locally, because one sector may be one area of a city might have very different SKU preferences versus another area of a city. So you can maintain inventory hyper locally. So I think it affords for a lot of kind of this behavior of Kirana being translated online, which is why I'm fairly optimistic actually about kind of this quick commerce grocery. From a challenges perspective, of course, right? Like I think the first real challenge is your basket size challenge. So if folks are ordering multiple times a month or multiple times a day, are you going to be able to get enough at once from a person or people in a locality for you to justify the logistics costs? I think that's the first challenge that you will need to kind of deal with. The second challenge you'll need to deal with is, of course, on the cost side, right? Like you said, the logistical challenge of doing 10-minute delivery means that every 2-3 kilometers, you'll have to set up a dark store. Now, in certain cities, that's, of course, going to be possible. In certain cities, not really, right? Because, say, cities like Bombay and cities, some parts of Bangalore, even some parts of Calcutta, Delhi, all of them are very, very expensive from a real estate perspective, right? So how you kind of manage the cost of doing that in those pockets will then determine how profitable you can make this version of grocery delivery. So broadly pretty bullish because of the kind of behavioral change it could possibly get. But of course, it comes with certain challenges that these players will need to figure out.
And I could kind of hear from the way you kind of laid it out, and obviously working in a sector where there's a lot of kind of informal competition, that opportunity for embedded finance. And I think that's something, that is the underlying theme of Saison Capital, at least at first glance. And so I think that's a really great transition. And maybe so yeah, no, I think this is a great kind of transition to Saison Capital. So first, could you tell us, how did you end up kind of making that leap, or when did you realize it was the right time to kind of make that leap from an operator to more on the finance side? And also maybe just, curious, when we say that it's a single LP fund, is that different from corporate VC?
No, a single LP fund is a corporate VC in the sense that it's balance sheet investing. So as opposed to a VC fund that would raise money from LPs, this is a single LP fund, which means that you're investing off of the balance sheet of a single parent. So that's I think just two synonymous terms.
Got it.
And from a transition standpoint, I've been in e-commerce for the last 7.5 years. That was a fantastic ride through Lazada and Southeast Asia's growth, and then India's growth, in the last 5.5 years. With family, we kind of moved to Singapore, and then in Singapore, when I was looking at kind of what I wanted to do next, to me, it's always it's always fascinating to understand what the next problems are, right? Like what are people solving for next? What's the next big wave in tech, right? So I think the VC role basically gives you the opportunity to kind of have a ringside view of that in a slightly broader way than being an operator. And I feel like being an operator kind of gives me the ability to kind of assess businesses in a way that I think is meaningful from a returns perspective for the fund. So that's the skill set I bring to the table. But from a personal standpoint, I think it gives me the breadth to kind of really, understand what all people are trying to solve for. And I think the other thing I think it gives me is the optimism, which doesn't usually come with an operator role. Like operating for 5.5 years in grocery in India is quite tough. It's tough, it's tiring, it's doing one thing every day for 5.5 years. So I think this just gives you like that breadth of optimism. You meet folks every day who are just so much smarter than you are, very different from who you are, building something completely that you had never even thought of, that you'd never even applied your mind to. So it just gives you the opportunity to just be so much more than what maybe an operating role gives you. But I think, of course, the foundation of an operating role is necessary to be able to make sense of what I'm listening to at this point. So very grateful for that opportunity of having been an operator, but yeah, very, very excited about, having made the transition to VC.
And for the benefit of those who are listening, maybe if you could give us a little bit of background on Credit Saison and and how did they end up kind of going into this VC space?
Sure. I think the Credit Saison's background essentially is that they're Japan's #1 credit card issuer, and broadly they have ambitions outside of Japan. So these ambitions outside of Japan led them to two paths in a sense. The one path is kind of being wholesale debt lenders in countries like Vietnam, Indonesia, and India. So what that means is essentially that if a fintech player, like say, wants to lend money to say SMEs or its consumers, it would approach Credit Saison, the debt entity, for a lending line. Right. So that's one part of the business. The second part of the business is a venture business outside of Japan. So these are broadly two prongs of kind of, having the vision to kind of go outside of Japan and establish Credit Saison as a brand.
And I see these kind of three main verticals, fintech, embedded finance, and consumer SaaS and non-fintech. And I just want to go a little bit deeper on this idea of embedded finance because it's quite new and new to us. So once again, for the benefit of, and by the way, I highly recommend the Medium articles that the team puts out in the knowledge library from the team. But could you give us at a high level what is embedded finance and from your perspective, and particularly these three pillars, right? The ecosystem builders, the pipe builders, and the infrastructure embedders. If you can give us an overview.
Yeah. So I think instead of like kind of going through these specific sectors, right? Like I think broadly the way to understand embedded finance is that it's a company that on the face of it is not a fintech, but makes significant revenues or gives significant benefits as a fintech. So let me kind of just explain that really briefly with an example, right? So let's pick up Udaan here. I think Udaan is one of the best examples of an embedded finance company. So Udaan equivalent in Bangladesh is ShopUp. So basically what ShopUp does is that it takes FMCG demand on the B2B side from these dukans, which are your neighborhood stores. And then it aggregates that demand and is a B2B supplier to them, right? So on the face of it, like if you had to describe what ShopUp or Udaan does, it's an FMCG B2B distributor. That's what it is, right? No more, no less. But actually at one layer, like if you peel away, what Udaan actually does is that it helps these kirana walas or neighborhood stores with working capital loans. And that's also a big source of revenue for them. So it's not just that they supply B2B FMCG products, they also kind of have a lending line to these guys. So which is I think the epitome of being, of an embedded finance company. So on the face of it, you are something, but below, like when you peel off one layer, you're actually a fintech and you're actually doing something which only you can do actually. So there's that other angle also, right? So Udaan is able to lend, or ShopUp is able to lend to the end dukan or kirana wala because they have visibility on what products they are buying from you, right? You would not be able to do this otherwise. So for instance, if I tomorrow set up a company saying, okay, I'm going to do SME lending to the neighborhood store, I would have no idea how to kind of build his credit book, right? Build the kirana wala's credit book. But Udaan does, because they're fundamentally B2B FMCG suppliers. So I think the way to think about embedded finance is broadly that it's a company that did not start off as a fintech, but fintech is a very essential part of how they provide services to others.
And I guess part of the story of how they continue to scale and monetize their user
exactly
as well.
Yeah, and we've actually done a bunch of B2B marketplace investments. So we were in Ula, which is the ShopUp of Indonesia. We were seed investors there. Grosari is a company in the Philippines. So Ula's here, Grosari is right next to it. Also investors, which is a Philippines company. Most recently, we invested in Bazaar, which is a similar company based out of Pakistan. Then we have a company called Vigo Retail, which is based in Vietnam, which does a similar model. So we, at this point in time, I would say pretty heavily on the embedded finance hypothesis in the B2B space.
And I also really like the layout of, even I know there are some entrepreneurs in the room across some of these verticals, and how do you induce, I guess, embedded finance, and what are some strategies and platforms to do so? Quite interesting.
So even if you think about the 10-minute grocery delivery, right? In a future scenario, you could actually be building out franchisees of the dark stores, and you could be kind of lending to them to set up financing requirements for them from a dark store standpoint, right? Because not everybody has the capital to start off a dark store on their own. Like they would either need help from somebody, which is an institution, or they'll go to a local money lender, right? So if you help them get that credit at prices which are better than what a local money lender gives, it's actually a win-win for the ecosystem. And you can also give that credit because you broadly know how much demand he's going to get, how much his costs are going to look like, what his repayment is going to look like in the month, right? So again, even Grofers or any of these quick commerce delivery guys, their dark stores could become potential, embedded fintech plays.
Which makes a lot of sense. Another question, so going back to the kind of the three verticals, and a question I had was, when you look for non-finance opportunities, like consumer SaaS fintech, is there a particular unifying theme, or is that also tied to the embedded finance hypothesis?
I think the theme, I would say, like 2-3 things, right? One is that the problem statement needs to be like real enough or big enough, right? That's the first thing any like VC would look for, right? Like you need the company to be solving a problem, or giving a benefit which is significantly better than what life looks like today, right? Second, the monetization pool has to be available for you to kind of tap into, right? Like currently people should either be paying for that service, wanting to pay for that service. One of those conditions need to exist, right? And thirdly, of course, this company's ability to kind of tap into that monetization pool becomes very important. So I would say it's not like we only go after embedded finance fintech companies. We also, like Segari, for instance, is not an embedded finance fintech company at this point in time. What they essentially do is they have a community group buying model where there's a community leader and that person aggregates demand for grocery in a locality in Jakarta. And then Segari kind of delivers that order to the group buying lady, and she then delivers it onwards to the consumer. So it's a very simple grocery group buying model, which is quite common actually in China. It originated in China, and then Segari kind of does that in Indonesia, right? So at this point in time, it's not like when you were evaluating Segari, broadly, it's a consumer lens, right? You know that because they kind of cut out the middleman, and because they have direct to warehouse sourcing, they will be able to give better quality at cheaper price to their end consumer, right? So that's the bet that we are trying to make in Segari, which is that they will be able to give differentiated quality fruits and vegetables to an Indonesian consumer, right? So it's a consumer B2C bet in that sense. Now, Segari could potentially get into the business of kind of, providing working capital loans to the social seller, to the community group buyer. But of course, that's not part of the thesis at this point in time, right? So it's not that we're a purely embedded finance fintech play. We also look at other companies which have models which broadly are solving for big problems in emerging markets.
And looking at the markets that you've got exposure to, India, you just made your first investment in Pakistan, Indonesia. These are pretty large consumer markets in and of themselves. So do you look for companies that can go regional, or is that not necessarily part of the, I guess, the first layer, I guess, of kind of screening a company?
Oh, not at all. It's not at all part of the screening of a company, because actually all of these, like since I've worked at Lazada for like a couple of years, actually it's very clear that all of these markets are very, very distinct in many ways. So maybe Malaysia, Singapore, we could have gotten some supply chain benefits from the two, but Thailand, Vietnam, Philippines, Indonesia, like all of them very distinct consumer markets. What sells, what price point sells, how you generate demand, like back in 2014, 15, the importance of social media depending on the market. Like for instance, Line used to be really big in Thailand, but not so much in other markets. Indonesia was very heavy on Facebook. So I think it really depends on which market, how you generate demand, what quality of demand that is in terms of price points, assortment, all of that. Supply side, again, hugely different, right? Like Indonesia and Philippines, bunch of islands, much simpler in Malaysia, much simpler in Thailand. Vietnam has this whole like north-south supply chain issue. So essentially you source from the north to deliver in the north, you source from the south to deliver in the south. So at least for my category, which used to be home and living back in the day at Lazada. So a lot of learnings from that time, that each of these markets independently are actually massive. And you need to build very specifically for these markets because the consumer insights are actually very different across the board.
Right. So there's a lot of nuances that you can't just kind of replicate. Across borders.
And of course, language is the most. This is the most basic one to think of. But aside from language, it's also like a supply chain and demand perspective.
For sure. I want to talk a little bit about kind of the I guess the pipes or the plumbing and how a VC fund kind of operates, particularly one like Saison Capital. So one, how do you do your deal sourcing? Where does it come from, and how do you guys screen companies?
Right. So deal sourcing, I would say, is twofold broadly. You divide it between kind of like going out there and looking for companies in spaces that you believe in. So for instance, if I think that social commerce in Bangladesh is going to be big, right? Because it's big everywhere else. The factors that impact other countries also impact Bangladesh. Similarly, I would kind of reach out to folks in Bangladesh like yourself, maybe, And I would ask you if you've met folks building interesting companies in the space, right? And kind of meet all of them. That's one way that we do it. The other way we kind of do it is also, of course, there's a lot of inbound, because we already have, like you have on this page, there's Krishnan and Willie, like all of these founders in the network, all of the folks we've worked with closely. So there's a lot of like that kind of inbound coming in because of the network and the brand we already have in the market. So I think it would be a combination of both.
Got it. And how do you go about kind of taking, just curious to know how many decks would you might see in the course of a quarter or even a year, and how do you get to them to the point of, I guess, making a decision on an investment?
Right. I would imagine we see about 300 to 400 in a month, I think, from just a DEX perspective. The way we screen would be to broadly, we would kind of have a very initial view of whether this space would work or not, right? If it's a interesting problem, if it's a big problem that these guys are uniquely trying to solve, that's the first lens, right? Then the deck kind of becomes interesting to go and meet the company, right? Meet the founders. And then once you meet the company and the founders, you form a view on whether these guys are the best guys to solve this problem, right? And they're thinking about it in a way that you have not seen before. And of course, then the ability to kind of monetize the problem statement. So I think the first pass on a deck is just, is it an interesting problem at all, which is being solved for either in a different way or, in a way that resonates with you.
Got it. And do you have like an investment committee, or how are the investment decisions made ultimately?
Of course. So we have a team of investors who are based out of Singapore. So it's a team which has 4 of us. So there's so Mori-san is the managing partner, and he sits on the IC. So there's Chris, Chia, there's me, there's a recent addition to the team, actually, Chinan, and Aldo Long is actually, in fact, just left us a month ago. So there's broadly 4 of us who kind of sit out of Singapore. And then there's an IC, which also has folks that sit in Tokyo. So the IC is the one that finally approves the investment in terms of whether we go ahead with it or not, which is broadly in line with what most VCs would be doing at this stage.
Sure. Always curious how VCs look at this question, but what are some typical reasons you end up kind of saying no to a founder or a founding team?
I think the key reason one of the key reasons to say no would probably just be that the problem statement is not like interesting or fleshed out enough. I think that would probably be one of the largest reasons to say no. Because as long as the problem statement resonates with you, you think the area is interesting enough, you would definitely want to explore the problem.
And when we say interesting, it's not large enough, or it's
likely not large enough. You don't think enough people kind of suffer this problem. You don't think the way these folks are approaching it is probably the most ideal way to solve it. A bunch of I think it's a combination of those factors. So I mean, I can give you an example actually from my own experience. So I remember back in 2015, before I joined Grofers, I was thinking about kind of starting up and what to do and all of that, right? So I think my idea was kind of building out like an appointments software for beauty parlors and like folks like that in India, right? So then I spoke to a few people, and most people were like, at that time, of course, today things have changed, and I think there's a big company in the space and all of that. But of course, times have also changed, right? 2016, Jio came into India, mobiles became more prominent and all of that. But in 2015, nobody knew all of this was going to happen. So in 2015, when I went to most folks, people were like, from a consumer standpoint, this is not a big problem for me. Like I usually call the place I want to go to. I get the appointment pretty quickly. If not today, I get it tomorrow or over the weekend. I'm pretty sorted. Like I don't keep switching parlors, for me to kind of have this problem as a problem statement. That was the consumer side response. The Parler response was pretty similar also, in the sense that, it pretty much works with like an Excel or like an appointment book. This is not like a big scheduling problem to solve for, So I think, like, to give you my own example, this to me would be the perfect statement of something that, if I had not gone and validated a couple of, like, really quickly with a few folks, I would have gone down the path of trying to build something and then try to raise money for it. And then it would have come to somebody, say maybe, maybe a better VC than me, of course, but it would have come to them and they would have been like, okay, you know what? I don't see the big deal here. This is not a real problem. So something like that. Like, I feel like it's taking that problem and being like, okay, is this big enough? Is this large enough for you to want to solve it? Again, today things have really changed. There is, I think, a company in this space that does really well in India today, but that's also because of the tailwinds of geo and mobile phone penetration and all of that. And they, of course, built out the whole software suite for parlors, and those guys.
And even kind of listening to that example, I mean, timing is a big part of that too, right?
Absolutely.
When a problem's time has come, I guess, to be solved. Another question. So, you invest across these different stages, seed to Series B. Are there typical kind of structures or terms that you prefer, or does it depend on the stage as well, and instruments as well?
No, not really. I think it depends on the stage. It depends on the type of deal it is, the kind of founders that we're working with. I think we're pretty flexible, as is the VC community as a whole. So I wouldn't say there's any like thumb rule to go by. Every deal is its own animal, and you kind of assess it as such.
What about valuations? Are there ranges that you look for across these different stages, or it's also once again?
No, absolutely not. I think a lot of the, all of the stages today are actually kind of overlapping in many ways as well, right? So broadly, I think it's better to understand if a company is pre-launch, MVP launch, launched with a few users, scaling up users, and revenue. Something like that, like a mental model around that is more helpful than seed, pre-seed, Series A, all of that. So it's difficult to kind of, wrap your head around the terminologies of these rounds and just tell yourself, okay, this is what it is. The company is pre-launch. So at pre-launch, I would like to see these three things. At launch, I would have liked to see some of these things. So I think that's how we would look at it. But valuation, of course, it really depends on how big the problem statement is, who's trying to solve it, who are the other competitors, all of that.
What in terms of and I also saw the co-investor list, which is pretty impressive. Do you typically look for a co-investor, or do you lead rounds?
We've led a few investments. We don't look for a co-investor as such. No, I would say we form our conviction quite independently.
Got it. And I see the list of portfolio support activities. I'm also curious, just the the value creation strategy or approach, right?
Yeah.
For portfolio, and if you could tell us.
Of course.
Yeah.
Of course. I think few things I would describe ourselves as very founder-friendly, responsive investors. I think in today's world, it's very important to kind of be available, especially the stage that we invest in is seed, pre-seed. So at that stage, it's very important to be available to help founders to get to product market fit, which is what your role is, right? You have to be that founder-friendly figure to kind of assist in whatever way or shape or form that takes. It could be kind of introducing folks in your network to them from a hiring standpoint. It could be introducing folks from your network to them from like conducting like a 1-hour session on how this has played out somewhere else, right? So for instance, we recently got together to do like a grocery tech kind of session for one of our portfolio companies for about an hour. So that was kind of by somebody who's built out supply chain tech in India for a grocery company for like 6 years now, right? So very, very well placed to get into the details of the discussion, as opposed to say somebody like me who has a very good business view of it, but not a very good tech view of things. So I would be able to help, but not with the details. But this person can actually run through in a much, much more granular way, which is what that team fundamentally needed, right? So I think it could take that. It could be like, regulatory coverage. It could be, multiple forms and shapes, right? Whatever you think the company needs at that point in time, but more importantly, of course, what the founder is looking for.
I think the knowledge sessions are quite interesting, particularly in those early stages, and especially if you can, obviously, going back to the point about nuances across markets, but you can still take a lot of those lessons, especially from founders and I guess operators who've been there at the later stages.
Yeah.
I also found this interesting. So, this point about the wholesale debt to portfolio companies. Do you do that as well alongside equity?
Yeah, so I broadly would say that that's a separately run P&L. It's a separately run team in India and Indonesia and Vietnam. But from our perspective, what we do is we kind of help the companies think about that aspect of the business as well, right? So there are a bunch of like senior folks who sit out of India. So Presha, the CEO of Credit Saison India. There's Uttam, who's head of product for Credit Saison India. These folks are very, very helpful to help our portfolio companies think about lending as a business, or what you need to do to get started, right? Do you do balance sheet lending to begin with? Then how do you move on to a third party? What are the different business models you can think of? How do you think of underwriting? How do you think of risk? Like, what is the team structure you need to build out in order for you to run this business? So these folks are tremendously helpful in coming to a portfolio company and kind of helping them think through some of these topics in a way that I have not been part of a lending business before, right, myself. So my ability to help a portfolio company think through that aspect will be pretty poor, right? But these guys come in to help them do exactly that, and which is very critical at that time. So it could be that the company is not ready to take on money, right? They don't need debt at that point. What they need is a roadmap to think about the business. Like, I am today building a quick commerce 10-minute grocery business. Can someone please help me think about how to lend to this dark store franchisee guy? That's the problem statement. So these people would be most well equipped to kind of help them think about it. Now, if that scales, then of course, Credit Saison becomes a debt partner as well. But I think the thought process here is the most important part of it.
Makes sense. And that's part of the advisory approach. Another question, how long do you typically tend to hold investments, and what is the path to exit that you guys are thinking about? Or, yeah.
There's no definitive answer to that, to be honest, right? Like, we're pretty early on in our journey. I think exits is probably the last thing we will be thinking about at this point. We're just 2 years in. In fact, October is our anniversary month for 2 years. So acquisition and IPO, I guess, is the most well-known paths to exit. But of course, there's no time as such that we're looking at. We're basically looking to kind of add value to our portfolio companies and help them kind of grow in the direction that they want to.
And looking at the portfolio companies, 2 years, you guys obviously have been very very active. In the last 6 to 12 months, curious, has there been any kind of overarching themes when it comes to, say, geographies or particular businesses that you've been finding that you're getting more active in?
Yeah, I think from a geography lens, we made our first investment in Pakistan. We made our first investment in Nigeria last month. So I think those are the two big themes in terms of like expanding our scope beyond, just Southeast Asia and India. So the regional expansion is definitely, I think, the biggest theme in the last 6 months. The other theme, of course, is that we're continuing to look at embedded finance, but with a much sharper lens, right? Like, so we've done a lot of embedded finance in the B2B marketplace spaces. Now we're looking to kind of take that thesis into other B2C and B2B verticals. So ed tech, health tech, all of that, all of those sectors, wherever we think there could be an interesting embedded finance play.
Curious, as your portfolio grows bigger and the team isn't going to get that much bigger, right? And so how do you divide your time between portfolio support versus pipeline development?
Right. So the interesting thing is, as companies in our portfolio also grow bigger, what they need from us is also, that reduces, right? So the companies that you spend time with at any given point of time keep changing maybe every year, every 6 months to a year, right? So I would say that right now, the companies that I'm spending most of my time with, I'm maybe in a year or so, that would change quite a lot. Because those guys would already have achieved product market fit, achieved growth, achieved, certain milestones that then, my support would be fairly meaningless to them, if I had to put it that way,
Last question on the fund itself. This is the genesis of our conversation a few weeks back, but how are you thinking about a market like Bangladesh? And what do you see are some opportunities based on your initial kind of research so far?
Right. No, absolutely. Like the way I am thinking about Bangladesh is definitely, I think the way we would be thinking about an Indonesia or a Vietnam at this point, right? Very interesting opportunities in many up and coming spaces which have been solved for broadly in, say, India, but still unsolved for in Bangladesh. So the interesting sectors are like, there are a lot of B2C verticals today in India, right? There's, of course, the B2C horizontal giants, right? There's Flipkart, there's Amazon, but there's Nykaa, there's Lenskart, there's First Cry, right, for kids and baby. So all of these have built out specific verticals in e-commerce, right? Bangladesh, I think, hopefully we'll see a bunch of that coming up, right? Of course, there's grocery also, but grocery is a slightly different beast. B2B marketplaces are very, very interesting in India. Also, ton of them have come up, multiple unicorns as well. I think that could be an interesting, thing to deep dive into in Bangladesh. I think the opportunity space in Bangladesh, if I had to map out in terms of marketplaces and fintechs, would definitely be quite interesting versus what we've seen in India in the last 10 years.
So do you have a gender lens investing framework? And if yes, how important is it when assessing consumer tech companies?
So maybe I can just, I would say a gender lens as an investing framework, I would say no. I don't think there's a gender lens as such, but I would love to see kind of more, female founders. Of course, like we would love to kind of invest in more female founders as part of our portfolio. So I don't necessarily think a business is evaluated on the basis of whether a woman started it or not, unless, of course, there's something very particular to why that business exists. So, for instance, I think the founder of Nykaa, right? She's a woman. She's done an exceptional job. It's going to IPO hopefully by Diwali, and maybe there was something unique in her being a woman that helped her create something like Nykaa, right? So, broadly, I think hoping to see more women as part of the ecosystem, as either part of the investor ecosystem or the startup ecosystem, even senior employee ecosystems, to be honest, right? The employees at startups also tend to be very, very male dominated, at least in India. So it's great to see more women kind of join that community as well.
Yeah, good point. And I think maybe there's a greater kind of discussion around impact as well. So one is, okay, so going back to the point about pre-launch, launch, right, and then launch with a few users, and then going to revenue. So I think I get this a lot too. There's a lot of fintech in Bangladesh at least is very regulatory bound, and getting licenses and such. And so I guess the question is, what is the chance of a fintech to raise funding as soon as it gets a license from the central bank, and what else do you need to see for it to be to get to the top of your pipeline, so to speak?
Yeah. I think that's the thing, right? Then the license becomes the moat. It depends on, so for instance, we're seeing this play out in Pakistan, right? They've given out these EMI licenses, and a bunch of players have raised capital because the license is the moat. So if you look at Tag in Pakistan or Sada Pay in Pakistan, right? They've all raised on the basis that the license is the moat, because these licenses will not be given as frequently by the State Bank of Pakistan. So I think if the license is the moat, if there is a real problem that the license enables you to solve, I think, of course, a fintech could get funding basis just a license. And of course, the founding team needs to be strong, and you need to be able to demonstrate that you will be able to build a business based off of that license. But I don't see any reason why a regulatory license is not considered a mode for funding.
Another question, going back to, I guess, the gender lens kind of question. In the development sector, international donors would like to see an increase in female participation and female beneficiaries in all projects. And obviously, that's a big theme for Bangladesh. They appreciate projects which are socially inclusive. It has been a pertinent criteria. Is the same case for investors in the for-profit sector? Maybe if you could talk about your experience.
Yeah, actually, so I would not look at it from this lens, right? The lens that I would apply though is a little bit different, which is that so we have a company called Vigo Retail in Vietnam, which is a social commerce B2B FMCG company. So what they do is they use agents who go to these mom and pop shops, take their orders, and then they fulfill it via distributors, right? These agents typically are working moms, right? Who are incentivized to earn this extra living to kind of provide for their families, right? Similar to Segari in Indonesia, like I mentioned, the community group buying folks are mostly all women. They are women, kind of housewives, gotten out of the working sector, are trying to earn an extra income, right? So this sector is very critical, actually, from a business perspective also. It's not just about empowering them. It's actually, these guys have much better retention because this income is meaningful to them, right? To make a difference to the lives of their kids, to the lives of the family that they help support, right? They're not the primary bread earners, but they kind of are very involved in the financial decisions that this family makes. So I think the lens we would look at is what is the target segment that you're going after in community group buying or in social commerce. If that segment largely consists of women, and women who've kind of dropped out of the workforce or are trying to make an extra income on the side, it becomes very meaningful even for the for-profit sector, because it kind of indicates a ability to retain and ability to kind of generate revenues, which like a non like somebody not in this profile will not be able to do. So I think that's where it becomes interesting. So it's definitely a for-profit lens, but this space makes it very, very interesting for even these when you tackle these kind of problems, like how do you provide extra income to a woman sitting at home so that she can make her family life better.
The market opportunity,
Yeah.
which there is significant opportunities to capture. So want to have a few reflection questions, and these might be a little too general, but still would love to kind of get your perspective, particularly from a Southeast Asian standpoint. One, what specific barriers, just from your experience, prevent more women-led startups from being funded? Or even being created, maybe that's another challenge too.
Yeah, so I should speak for myself here, actually. Like, I feel like I've not been a VC long enough for me to, claim to know why other people don't fund startups and all of that, right? I think broadly in every sector, why women face, not discrimination, but are kind of left behind, because most people try to hire or fund folks who look like themselves, right? So even I'd say when I was in an operating role, right, it used to be a big part of my life to explain to my colleagues why they need to be not gender neutral or gender blind. They need to actively support women, and they're not doing anybody a favor by doing that. You need to do it because your default mode is to support someone who looks exactly like you, or fund someone who looks exactly like you, right? So being like a woman from a non-traditional background from an emerging market, for me, if I end up supporting folks who look like myself, I think that is progress to my mind, right? Whereas, and the only reason, like, for instance, I got these opportunities were because the folks that gave me these opportunities, like say the founder at Grofers, for instance, was not gender blind to me. He was like, okay, this is a grocery, very heavy operating business, but I know that you will make it work in this male dominated environment, right? So somebody took the faith and gave me the opportunity, right? So I think the more you pass it on, the more women kind of get into the pipeline as well. But I think the real fundamental problem is essentially folks only betting on people who look familiar to them, which I think is the cycle. Some like folks need to keep breaking here and there.
And I think we've got time for one more. So, there are obviously women in the chat, young women who are listening who aspire to be in a position like you at some point. And so what are some advices that work for you as a woman in this space, both as first as an operator, then the VC, that you might pass along?
I mean, I think I genuinely, I feel like I have no advice as such, but I think it's good to speak up on behalf of yourself and for other women around you. Because if you don't do that, the cycle will not break. So I am fairly proud to say that every time somebody claimed that they were gender blind, or they were like, oh, I only hire on the basis of merit, or some such like absolute nonsense, right? It's just a default way of saying I hire only men, right? So when somebody says that, try to make sure that you kind of make your point that you're not supposed to just do that, right? You're essentially perpetuating stereotypes when you say things like this. If you're in an operating role, of course, I think it is incumbent upon you to kind of try to hire more women, try to get your HR to hire more women, try to kind of sensitize the organization if you're in a leadership role to hire more women, try to mentor the other women in the organization to navigate, say, a male dominated workspace. I think all of these things, depending on where you are in the org, all of these or some of these are very helpful to kind of go along. And these go a long way, actually, like in terms of even like you know uh, even in an org, by example you're trying to get your point across, 4 other junior women will look at it, right? They will be like, okay, you know what, like this lady speaks up for herself, we should also speak up for ourselves. So everything, I think, helps broadly in terms of trying to build this culture which is slightly more progressive and friendly towards women.
Visa, thank you so much for spending your Friday with us, and looking forward to having more chats in the future, and hopefully doing some work together on Bangladesh. But thank you so much for doing this today.
Yeah, absolutely. Thank you for having me. I had a great time. Very, very fun questions, actually. Best use of my Friday afternoon, to be perfectly honest.
Awesome. Thank you so much. Have a good rest of
Thank
your
you, Nirjo. Thank you so much. And thank you, team, for organizing
Awesome.
this.
And talk to you soon. Cheers. Thanks,
Yeah.
everybody. Cheers.
Bye.